Today is Tuesday, December the 1st, and we're looking at the McClellan oscillator, and we can see that it had moved down close to the neutral line. Now we've had a little bit of a bounce up, but it's really in no man's land here. It's not telling us if it's headed in one direction or another. If we look at the SPX, you can see that this bull pennant that we were talking about was exceeded, and we seem to be just going higher. The Dow Jones is also continues to exceed the pre-COVID high, not as much as the S&P, but is up there. The NASDAQ as well is just slightly above, very slightly above the high that we experienced in September of this year. The stocks that we want to take a look at, we haven't looked at Apple in a couple of days, and it has broken out through the cloud. Today it came down to test the top of the cloud. Yesterday, the high of the day was the top of the cloud. I didn't do a video yesterday, but yesterday the top of the cloud for the Chiku span right here, that proved to be resistance. And we did another run at it today and broke through. So now Apple looks like it is in a position to buy. And with Christmas coming up, they're going to have an excellent fourth quarter, their first quarter, our fourth quarter. NIO is the stock that we've been looking at and trading more heavily. Certainly took a beating today, down $6.38. There was a scandal in one of the EV makers in China, and that may have scared or spooked a lot of investors in EV stocks. I continue to hold a long position, as you know, but I'm still keeping some short calls. And on Friday, I took off some of those short calls for pretty nice profit, rolled them out to a following week, December the 11th. Yesterday was able to take profit on those again because they made 50 or 60% of their premium. And now I've taken out the December 4th, so the Friday 50 calls, because I think it's going to have a bit of a struggle to get the volume back. But this is clearly a stock that is just being day traded. If we look at the volume overall, the volume in the last few days, although it's been negative volume, has not been above the 20-day moving average. So this is not big commercial players that are playing. This is day traders. And you know how you can tell? By drawing a Fibonacci from the prior day's high to the prior day low, and watch how the trading is automated between those values. It's not even anything to do with the Woody's pivots. We can take the Woody's pivots out of there and take a look at this. We started off the day at 38.2% of the movement for the prior day. That was Monday. So Monday we had this down move, and we came back up and retraced the full down move back up to 38.2, so 68.1% recovery with 38.2% short of the high. So that's where we opened today, and then we continued to move down. Where did we get support? 127.2, and we stayed at that value from 10:30 up until 2:30 in the afternoon. And then we started to drop again, and we dropped to 168.1. So this stock is being traded. I've done a number of videos now showing you that the prior day's Fibonacci's are the buy and sell levels for day traders. Whether they're trading the stock or whether they're trading the options, or like myself, shorting the options, these are the values to follow. So let's look at it now on a daily basis. And we see a pattern where the stock rises, then pulls back. Channels, rises, pulls back. Channels, rises, pulls back. And then we had almost no channel, and we started this massive move up. We can take those Fibonacci's, well, we're going to use them tomorrow. Let's just delete them for now. So we've done that again. So we've got another instance here where we're pulling back, and we could expect, if this pattern repeats itself, that we'll channel and then we should move back up. The analysts are still bullish on this stock. Caterpillar, channeling. Home Depot, having trouble with the cloud. Let's look at the Chiku span, and the Chiku span is right here, broken through above the cloud. But today, found resistance. It even broke above the 50, but it finished below the 50, the Chiku span did. So definite resistance on the cloud. Home Depot is not in a buying position yet. AT&T, 28.85, still a great stock. Would love to see it pull back to the 50 again, maybe even lose the 50 a little bit, because it's just a stock that I want to keep adding more of. In terms of the banks, JP Morgan up 1.4%, finished the day with a pretty much a perfect doji as a fight between the buyers and the sellers. Walmart, channeling but moving higher. So this would be what you call a bull flag. You can just look at this channel here with the low channel here, the top channel there. So those usually break to the top. Walmart looks like it could be one that would break to the top. Looking at some of the other new stocks that we were looking at, SONOS did break out of this hourly bull flag, bull pennant, and now has started to pull back. CVS tried to fill this gap here. Actually, you'd have to say it did fill the gap. If you consider this tail here, then we've got a gap fill and a pullback, but that gap is full. So if you wanted to buy it, it would be probably when it crosses the top of the gap again, 69.55 would be an area to enter. And then Square, which has just been, I don't want to say a parabolic stock because it hasn't hasn't started the downside yet, but it's just been rocketing forward. It's been doing like NIO, where it's pulling back, moving up, pulling back, moving up. And if you draw Fibonacci's across those, this is just a Fibonacci that takes this low to this high, and we have the pull back to the 78.6, then up to the 127.2, then back to the 100%, now up to the 138.2, and we've pulled back to that. So there's a stock that's following the Fibonacci's, and if you wanted to get out of this stock and save any profit, 127.2, 190.01 would probably be a good point to set your stop.